Federal Reserve keeping rates unchanged and marking up, though, its forecasts for inflation. Joining us now with the impact on housing, lead analyst at HousingWire, Logan Mohtashami. Logan, there's headwinds and tailwinds. I guess I would think there's tailwinds. I don't understand why sentiment is going down. I mean, it's possible building material prices go up, but aren't mortgage rates responding to the 10-year dropping in yield?
Oddly enough, the 10-year yield dropping, mortgage rates falling, purchase application data for most of the year is positive year over year. Now, we're working from extreme low levels, but any uncertainty in the economy and economic growth slowing down is actually beneficial for housing as the 10-year yield falls. So when we think about tariffs and lumber, that's more of the new home sales sector. But for the existing home sales market, which clearly the White House, Treasury Secretary Bassett and Bill Pulte want to see grow, bond yields going down, just needing the mortgage rates to 6%. You can grow sales. I think the White House will be very happy with that this year.
Is there a construction labor shortage, and what does that do to? Is that got anything to do with closing the border or immigration or any of these macro themes?
You know, every year for decades, we have deportations, and if mortgage rates go lower and new home sales start to grow, the builders somehow find a way to sell homes and build homes. So we've been hearing labor shortage concerns for almost 15 years now. But if mortgage rates go down, builder sentiment grows, new home sales grow, the builders find a way to build homes.
But it could be more expensive. Why did builder sentiment go down in the most recent report? What do you attribute that to? Just uncertainty from tariffs?
There's two things right now. Mortgage rates had risen up to over 7%. Over 7% doesn't work for the housing market. But then on top of that, the tariffs, the builders' profit margins are being somewhat stressed right now. Inventory is up for them. Inventory is up nationally. So it's not as easy for them to sell homes and make as much money as possible. So naturally, their sentiment has fallen down. But if rates fall down, like it has for the last few years, the builder sentiment tends to increase even with other headlines. So the cure for tariffs is lower mortgage rates. And this is why the White House wants the 10-year yield to go down.
You know, the flip side, though, or the reason why mortgage rates are going down is important too, Logan. And some might say that the 10-year yield is going down because there are concerns about growth in the United States. The Fed just raised its expectations for unemployment. We've seen in the soft data, University of Michigan, for instance, consumer sentiment is at lows. And so I'm wondering, you know, how do you sort of factor in weigh, okay, we got rates lower, but the consumer is feeling less confident about the security of their job and economic growth?
During COVID, 25 million people were unemployed. It was a global pandemic. We had 5 million in forbearance. We had stimulus, but the 10-year yield collapsed and mortgage rates were at 3%. There's over 162 million people working because existing home sales are at the lowest levels ever when you adjust it to the workforce. It doesn't take much to move the needle from here. Very similar to the 1980s, early 80s, when, you know, affordability was worse. There was a recession early in the 1980s. Home sales were depressed. Mortgage rates fell down 2.5%. Sales started to pick up. So the housing market still revolves around the 10-year yield. We still have a lot of people employed because sales are so depressed. Mortgage rates going down for good or bad reasons will override any of the economy headlines just to get that bounce in sales, very similar to what we saw in the early 1980s.
So how would the Trump administration deregulate the housing industry? What are there permits is there red tape? What does that look like, Logan?
The red tape, of course, is one thing. Zoning is one thing. I believe Bill Pulte, the new head of the FHFA, might have some levers to pull, maybe to help GSE pricing. But again, you know, the federal level can only do so much. A lot of these zoning issues are state and local. So there's going to have to be a time where the state and federal level kind of work together with the private sector to get more housing going. But of course, opening federal land, if it's close enough to somewhere where people are living and there's some kind of infrastructure, that can be useful. That's something that's going out for the next few years. Supply is always the best way to defeat inflation.